Well, good evening, everyone, and thank you for joining us tonight on our webinar entitled Retire Rich from Your Chiropractic Practice. My name is Dr. Tom Preston. For those of you who haven't had the privilege of meeting before, I've been a practicing chiropractor for almost 28 years. I've been a coach consultant in this profession and in other entrepreneurs for almost 18 years. Had the privilege of helping thousands of entrepreneurs and chiropractors design and live the life of their dreams, and we're excited to share this information with you tonight. It's something that is historically not terrifically well done in this profession in terms of helping people understand the concepts of succession planning and market value practice assessments and those sorts of things. So again, we're honored you've chosen to join us, and we promise to make good use of our time together and give you absolutely everything we can to help you understand this really important construct and concept more clearly. So to start, let me ask a couple of questions, folks. How many of you believe at some point you're going to slow down / retire from practice? Kind of a rhetorical question. Some people say it's a bit of a dumb question, but I think a lot of people get into practice and don't sort of realize that they will not practice forever. There will be an end to their practice. And so I think it's important for just to literally plant that seed to remind you of that. The other question I have for you is this. When you do reach that eventuality, that end point where you are going to be done practice, would you love to get compensated well for the great business you've built, but maybe don't even know how to do that, or what's involved, or how to maximize the revenue you'll get when you do get into the final stages of your practice? If those are the kind of questions you've heard yourself ask, then you're in the right spot. We're definitely going to be going through some of those concepts tonight. My experience now, coach consulting in this profession all over the world for 18 years, is that every chiropractor I've ever met feels very connected and very attached to their practice. I know for myself, my practice was like one of my children. I've got 5 daughters, for those you don't know, and literally my practice was like a child from this perspective. I intended it, I planned it, we gestated it, we birthed it, if you will, to let me use the metaphor, and we brought it and raised it and grew it and allowed it to come to maturation. And literally there's some analogies there that I think are very apropos relative to that. And as a result of that, we feel, most chiropractors I've talked to feel very connected to their practice. It's very much a part of them. And so the idea of not being there someday, or to let go of that, or to let someone else take it over and to look after, to trust to look after the people that they've cared for all those years, is definitely something that's hard to do. So please understand, I empathize with you in considering this. Certainly how I started doing this work was as a professional coach consultant. I had several clients realize that they're in the wrong location or the wrong practice or the wrong form of practice. And so they literally were asking me, hey, coach, who do I turn to get a market value assessment of my practice? And I really didn't have anybody in the profession that I thought was doing a phenomenal job of it. So I literally just took my business acumen and my years of experience in chiropractic and designed a market value assessment that I'll share with you tonight to help my clients. Well, eventually enough people found out that we were doing it, and eventually we started getting asked to do it more and more, and of course it's now a part of the service we offer at Full Circle Coaching and Consulting. So one of the things that took me a while to do was to create the algorithm or the systems to really understand all of the intricacies of a chiropractic practice and how to evaluate it. It's definitely a very labor-intensive process, sadly, because there's a lot of numbers to crunch and a lot of data to gather, a lot of understandings, and you got to filter that through what's going on in the profession, and there's amplifiers to it, and there's basically just a lot of details to doing a market value assessment. We enjoy doing them. Hopefully I don't sound like I'm whining and complaining. We enjoy it because we know the end result it gives docs. It gives docs an accurate assessment of what their practice is worth on today's market. Again, let's make a disclaimer here. We're not doing forensic accounting assessments or something, which are a completely different, kettle of fish. These are market value assessments. And when the practices that do sell, that we have evaluated, we find on average, they sell for between 90 and 110% of our valuation. So we know that the systems, the algorithms we've come up with are pretty accurate and they actually work. So these are the things we want you to walk away with over the course of our time together tonight, over the next 40, 45 minutes. I want you to get greater clarity about the process of a practice appraisal and what business principles it's based upon. I want you to develop an awareness of what you can do on the asset side of things to maximize your selling price. We'd love you to get an awareness and a possible game plan for what you can do to be doing to increase the selling price of your practice from a goodwill standpoint. We'll talk a lot about goodwill tonight. But also, if you develop an awareness of what you can do right now to maximize the profit of your practice while you get to serve more people in a more fulfilling and systemized way. BJ Palmer talked a lot about the adjustment with that something extra, and there's been a lot of speculation of what that meant. I certainly have several different versions of it. The one that makes the most sense to me, adjusting with that something extra, is adjusting with that present time consciousness, knowing that you're nowhere else but right there with that person in that moment, and you really are connected to them. And to the degree that you can systemize your business and get some of these things we're going to talk about tonight dealt with in your practice, it allows you to be more present time conscious, which most of us enjoy adjusting more from that place. We also, miraculously or mysteriously, it also creates more efficiency and effectiveness, which allows you to serve more people. And in my opinion, there's certainly chiropractic is underutilized in our in humanity, and particularly in our country or North America today. And for its benefit to all that, you get to generate more revenue as a result of that, being better exchange for the great service you offer. And it's basically it's a win-win-win all the way around. So we're definitely going to talk a lot about that. The last point we want to talk about is just really for those of you that may be on the call or listening to it recorded that are really close to getting a practice appraisal or would like to enroll our company doing that at some point. I want to give you a list of resources and items you need to get in line should you want to do that at some point in the future. So let's move on. Let's talk about what goes into determining the value of a business. So this is any business, but specifically we're talking primarily about a chiropractic practice tonight. And there's two main components. Those two main components are assets, which are things that you own, which of course does not include things like leases or leasehold improvements. Many people get mistaken about this. They think that because they put $50 or $100 or in some cases $200,000 into someone else's building, so it would look nice and they could actually practice there, they think that they should get that money back out of the practice. And in fact, nothing could be farther from the truth. You can't sell something you don't own. Now, aesthetics is part of our formula and part of our algorithm, so it definitely plays a role, but it is not a direct correlation. If you put $100,000 to leasehold improvements, it is very unlikely that you're going to get anywhere close to that, maybe even 10% on the dollar in terms of the overall impression it makes on the actual appraisal itself. So assets are set up on a depreciating market value basis, and we'll certainly give you some examples of what that looks like. Assets are definitely the easier of the two components. Goodwill is by far the less tangible and therefore the more variable part of it. It definitely makes up the majority of a chiropractic practice versus a manufacturing plant or business of some form may actually make up a much larger percentage of the, a smaller percentage. The goodwill make a smaller percentage of the total evaluation. But in a chiropractic practice, it definitely makes up for the highest percentile. It's one of the things the banks are usually fairly scared of, folks, to be honest, because it's nothing tangible for them to get a hold of. If things go south on the practice sale, it's like, how do they recover something that's intangible that they can't get their hands on? It's real in the sense that it adds value in the marketplace, but it's not real to the banks in terms of something they can tangibly turn around and sell and try and get their money out if there's a potentially bad scenario. One way to really summarize goodwill, folks, is to really think about it in terms of reproducible profitability. It's one thing to say that Dr. Tom or Dr. Bob or Dr. Adam or Dr. Catherine or Dr. Canty or whoever else is on the line tonight live can create the kinds of results that we'd like to see, whether it's creating a $5,000 or $50,000 or $100,000 worth of profit in a business over the course of a month or a year. It's one thing to say that they can do that. It's another thing to say that the next chiropractor coming into that practice could actually come in and create that same level of revenue. So it's about the reproducibility of the profit. And I've seen some practices doing incredible revenue numbers, $400,000, $500,000, but it costs them so much to deliver the service, there's no profit. So again, a kind of a synonym, if you will, for the concept of goodwill is actually looking at it in terms of reproducible profitability. And here's an example I often use. I'm not a big fan of their restaurants, but the big golden arches, the McDonald's restaurants. If you think about their business model and how systemized their business is, how reproducible the profit is. I was in a McDonald's restaurant in Auckland, New Zealand, many, many years ago. And the reason we went to it is because it was one of the only places open. Let's be clear. I don't love their nutrition. But also because we knew what kind of result we were going to get. We knew what we could expect. Where some of the establishments we'd been in had some really unique food choices that didn't really resonate with our digestive systems. And so we knew what we were going to get. It wasn't high quality, but at least we knew what we were going to get. It was reproducible. It was predictable. And so therefore, you can take in their systemized business, you can take a pimply-faced 15-year-old kid and stick him into a McDonald's restaurant franchise, and the damn thing works and it reproduces profit because it's structured and it's systemized. And from an investor standpoint, that's really what investors are looking for when they're looking at buying a business. They're looking at the reproducibility of the profit. And again, the more structure, the more systems, which we'll talk about in depth tonight, the greater the likelihood of somebody else coming in, a different investor, a different chiropractor coming in and creating the same kind of revenue. All right, let's talk about the concept of assets here. Assets are the smaller portion of a chiropractic practice. I've seen it be as low as like 4 or 5% of the valuation. I've seen it be as high in one example of like up to 50%. Commonly, it runs in the 10 to 20% range of a chiropractic practice. And basically what we're looking at here, folks, is we're looking at, literally a new, let's just use a chiropractic table, for example. The picture of this chiropractic table I have on the slide, this table is almost 15 years old. And yet it's been well looked after. It's been reupholstered several times. It still goes up and down. It still does all that it's meant to do. So this table may have been, $2,500, $2,700 new. And if you take the depreciation and you look at it over the course of those 15 years, and you looked at it on a declining balance, which is how assets are depreciated in most businesses, what you'll find out is that this thing could basically be worth nothing if you took it strictly on a depreciation model. What we'll do is we'll actually depreciate assets down to what we call market value. Because you and I both know that this table, even though obviously it's not worth maybe $2,500 or $2,700 anymore, it's still probably worth $600, $800, maybe even $1,000 on the open used market. And so again, taking things down to market value is really, the key. And again, one of the keys here, folks, as we look at depreciation, is we're looking at it on a declining balance. So let's just say that this table was $3,000 new. Most things depreciate between 20 and 30%, like computer software and electronics, about 30% a year on a declining balance, whereas other things could be 20, 25. We find on average, for sake of illustration, 25% on a declining balance is probably a pretty good example. So this table declined 25% the first year. That means in 1 year from its first purchase, it'd be worth about $2,250. If we took that and depreciated again on a declining balance, took 25% of that $2,250, we'd end up with $1,687.50, and so on and so on and so on. So again, in terms of assets, what we're going to look at is what the purchase year was, what the purchase price was, what the depreciation was, but it'll only go down to market value. And certainly, our expertise and experience in that will help, get the right valuation for, what it is that we're looking to manifest for you. Okay. So that's assets, and assets are definitely the easier of the two. Goodwill factors are definitely, it's more of an artful science than it is a complete science, but there's definitely many factors. I've picked my top 11 here. There's many more that we actually look at, but these are some of the more important ones, and I bring them up for your reflection. One of them is literally location. Where is the practice located in the community? Is it in a central and convenient spot with good visibility and good road traffic, or is it hidden and hard to find, like the third floor walk up of some industrial mall or something, which I've actually seen. So location is something that definitely is an influencer on goodwill. If you're someone that would like to think about how can I improve the value of my practice and my end game, or how can I improve the service that I offer humanity in terms of these goodwill variables, grab a piece of paper and a pen and just write down, these top 11 that we've picked. There are the many that we do look at. And rate yourself out of 1 to 10, which 10s mean, it's a real rock star piece for you. And 1 is, quite frankly, under that example, you suck. So rate yourself from 1 to 10 and you give yourself a score. Anything that's less than a 10, there's probably room for improvement on. You can then decide location, maybe not the best example because you really love your location, you love your building, you love where you are. You may not want to relocate to up the practice value, but there are several other that we'll talk about here that are definitely things that you could vary or change between now and when you sell your practice. Okay. Lease. What sort of a lease does the practice have? The landlord, and how much time is left on it. There's lots of different variations on lease, but one of the key things is the time frame, right? Because we want to again look at reproducibility. There's a chance if you had a really short time frame that the landlord might say, you know what, I don't like this new tenant, they suck, and I'm not going to renew with you. Well, now the person's got to go through relocating the business, which is a huge hassle. Huge financial hassle as well as emotional hassle. And it may actually lead to decreased clientele because people just get confused, and people are funny. They get used to where they're going. They like to go there. You change it, things kind of, mess up. So again, literally looking at lease and possibly renegotiating your lease or locking in for as long a time as possible is a good goodwill selling feature. The office space itself, is the space set up for convenient traffic flow for practice members and the team? Is it modern? Is it aesthetically pleasing? This is one place where leasehold improvements value does possibly show up in terms of a positive on the goodwill checklist side. But again, as I stated earlier, if you're just joining us, you rarely get even close to the amount of dollars you invested into leasehold improvements. You don't get them back out. And the reason you don't get them back out is, quite frankly, unless you own the building, you don't own the leasehold improvements. So they literally put money into someone else's asset piece there, okay? I remember I was out in Calgary doing a consult last year, in-office consult and some team building, and I really loved the flow of the space. It was just gorgeous, lots of beautiful windows. There was a big aquarium in it. It was really, really conveniently and awesomely laid out. And so I said to the doc, I said, you know what, doc, kudos on your layout. I think it's awesome. I think it's one of the better laid outs office I've seen. And he starts to laugh and he goes, well, it should be, coach, because you designed it. And I went, oh, damn, my bad, I forgot. So again, making sure there's convenient traffic flow, where the walls are, where the front desk is, how accessible things are. There's lots of factors that go into that. Also, literally, just how long has the practice been around? I mean, I've evaluated practices that are third, fourth, sometimes even fifth generation chiropractic practices, where this is the fifth, fourth or fifth. There's only one time a fifth, but there's multiple generations of people there. The people in the community know it's a chiropractic office. They know that that's the place to go to, and so literally how long the practice has been established is definitely a factor. Technique is another factor. And this is not just so much as a technique common to the chiropractic marketplace, but as a technique common and recognizable to the public. I've certainly consulted, done some in-office consulting around the world in some offices with some pretty interesting techniques. In my perspective, all chiropractic techniques work, so it's not a question of whether it works or not. The question is it something that other chiropractors could easily duplicate, and or does the public recognize it as such? Because if it is, it's a positive. If it's not, it doesn't mean that the practice isn't sellable. It just means it's going to definitely decrease its market value because there's less people could do that. Again, many people on the call would probably say, oh, Dr. Tom, you can convert a practice to whatever technique you want, and you're right, you can. But there's always going to be an attrition rate to people that do that. And from an investor standpoint, they don't like attrition. They like to maximize the probability that they're going to keep as many of the clientele as possible. Team is a huge factor in a goodwill equation in a chiropractic practice. Is the team trained? Is there ongoing training? Do they refer? How do you know that? Are they stay on once the practice sells and you get new leadership? Are there regular team meetings? Are there regular evaluations done? Is there support and challenge to them to grow as team members? I mean, there's just a lot of issues here as it relates to team members. And this is definitely one, folks, if you're someone that would like to improve your efficiency and effectiveness in practice, and or increase the bottom line and your selling price eventually someday, whether it's 5 or 25 years from now, making sure you're investing time with your team is very wise. I'll throw a shameless plug in for one of my mentors in the leadership realm. His name is John Maxwell. He's written many, many books. He's a very prolific writer. But he's, I think, one of the true great geniuses in the concepts of leadership. And his 5 stages of leadership, 5 stages of leadership. If you're looking for a really good summer read, that's one I highly recommend. It definitely was a valuable read for me when I read it several years ago. Another one is your practice focus. Is the practice more acute care focused and therefore dependent on new clients? Or is it more wellness focused with less dependence on new clients? Again, we're talking strictly about reproducibility. A business that's less reliant on marketing, less reliant on new clients, definitely worth more. So from my worldview in chiropractic, I want to see a high PVA because that resonates with my worldview and what I believe is the most valuable way to practice chiropractic. But certainly even from a economic or a practice transition or succession planning standpoint, you're focused on a more of a wellness type practice, a higher PVA practice is definitely going to make your practice more valuable. Clientele is another huge issue here. We're talking about, is it a generalized client demographic or more of a niche in the community? I know people that are more just work with children or just work with the elderly or just work with athletes or just work with the East Indian community or the African American community or whatever it is. There's different niche communities and they're all valuable. But again, what happens when you're dealing with a niche rather than a broad base is it minimizes the reproducibility of the profit. There's the word again, reproducibility of the profit for the next doc or investor that's coming on. So again, it can literally, a more broad-based demographic of clients will actually increase your market value assessment. Relative to clientele, are the Office of Financial Policies clearly defined and reviewed with clients so they sign off on it? Are they educated well and regularly about the health and functional benefits of chiropractic care? As a result, what is the PVA of the practice? So again, PVA is not the greatest stat in the world, but it is an indicator of how acute care versus wellness care you're oriented, how good of a job you're doing educating, and many, many other factors. So clientele is another goodwill issue. Systems. Are there systems in the office to educate the practice members? Are they truly system and team-based, or are they doctor-dependent? Chiropractic by its nature tends to attract a lot of very charismatic, strong, individual-based practitioners. And there's nothing wrong with that. That's not a moral discussion we're having. The consequence to that is that they want to do everything themselves, what I commonly refer to as Superman syndrome, which, by the way, we have actually a questionnaire on our website. If you'd like to know if you're one of those super persons and they're literally limiting your abilities to grow by systemizing and delegating more to your team, you might want to get on our website and do that questionnaire. We'll look for things like a written marketing plan for the practice is being followed, and is there, obviously ROI, return on investment for that marketing plan being tracked, adaptations being made accordingly. In other words, is it a vibrant, systemized business? If you're someone that realizes this is a weak point in your practice, I'll certainly, with your permission, give you a little bit more details later on, but we're actually doing a nuts and bolts system-based chiropractic program in Mississauga, in Toronto area, in the end of September in 2015. So if you're someone that realizes systems is not the strength in your practice, I'd be more than happy to have you consider coming to join us in that systems-based program we're doing in September in the Toronto region. One of the other ones here is number 10 on this particular list is passive income streams. Again, we're looking for reproducibility. If everything's doctor dependent, then the quality of the doctor coming in to run the practice is going to largely impact how profitable the business is. But if you've got passive income streams from therapists, or some people have rehab areas or nutrition or whatever it is, systemized and therefore reliable and reproducible, it's more attractive to an incoming investor because it adds more reproducibility, more sustainability to the business, which is, again, from an investor standpoint, really important. And the last piece we're going to talk about tonight is the digital world relative to goodwill. Does the practice have a website? Is it attracting new clients? How do you know that? If you're not tracking that, how do you know that? It's not valid data. Do they have a reputation marketing system set up? And if so, how are the reviews? Are you asking for reviews? Are you getting reviews? Which, by the way, folks, that is one of the most inexpensive strategies in today's world. I mean, this wasn't even a reality 10 years ago, maybe even 5 years ago. But reputation marketing systems can be a phenomenal gift to your practice in terms of increasing reproducibility and decreasing your marketing budget. Because third-party endorsement is something that's even more important today than it was. It's always been important, but it's even more important today than it was even 10 and 15 years ago. Because people are so information-laden right now, they don't know who to turn to, who to trust. They don't believe a lot of the data that they're getting from people who own their own business. So if you're getting third-party endorsement, you're definitely adding value to your practice through a market value assessment. All right, so those are some of the things that we want to talk about. Again, I want to just keep banging that drum. You're probably going to get tired of me banging it, but it's about reproducible profit. So anything that reproduces the profit makes it more likely to be reproducible. There's no guarantees in life. The more likely to be reproducible will add to the market value assessment of the goodwill aspect of an appraisal, assuming that you're wise enough to get one of those done one day. Which, by the way, just as a footnote, folks, a trend is we've been doing this now for many years, for 9 years, doing market value assessments. We're seeing a trend now towards more and more people, in my opinion, being wiser and literally getting market value assessments done long before they're willing to sell. Realizing that it's one part of their nest egg is to be able to sell their business. It's literally, it's like having a 401k or an RRSP account in America and Canada. And so, getting commonly, it's very common to get 6 figures plus for, a practice. And so just like you would hopefully monitor and invest in your investment, your stocks, your bonds, your mutual funds, whatever it is, you'd also be putting energy and time and money into your practice because it is definitely an asset that can grow like exponentially. So we're definitely seeing a trend towards people getting market value assessments done many years before they're actually considering leaving practice. And again, it's a trend that I support and I think is wise because I have a very preventative, proactive approach to health and to life. All right, let's talk about amplifiers. These are things we found over the last 9 years have definitely will amplify the price of practice in today's marketplace, at least in North America. We don't deal with Europe too much yet because it's a much smaller marketplace over there. and we just haven't been approached, although the formula and the algorithms we've created, I'm sure would work just as well there as they do in North America. But again, these are amplifiers that we've found, because basically an amplifier means is it's a broader range of the marketplace that would be willing to invest in this particular product or service, because it's perceived as more valuable to them. So the first one, folks, is literally geography. Is the city or town a popular location? Because commonly when they get called in to help docs sell their practice, one of the things we realize is that usually 50% of helping people sell their practice is selling the business itself, and the other 50% is selling the location of the business. I remember practicing in a little town called Bancroft, Ontario, underneath Algonquin Park. Great little practice, phenomenal practice, actually, and a great value for the dollar that the doc was asking. But we had to sell Bancroft, and Bancroft's a beautiful little town of 2,500. I'd love to live there, but not a lot of people do. So again, geography of the city or town, is a popular location. And again, commonly right now, the big cities in Canada, particularly Toronto, and Ottawa, and Edmonton, and Calgary, and Vancouver, definitely a place where people are looking for practices more commonly. So again, if it's there, it's going to be worth it. We usually can amplify as much as 5 or 10% of the goodwill value. Overhead, industry average right now is about 50 to 55%. So how does your practice stack up for overhead? Less is more in this case. And if you're running a 40, 45% practice, it's definitely going to be an amplifier on the purchase price, because more people are going to want to buy a 40% overhead practice versus 55% overhead practice, because there's just more net profit at the end of the day. It's just simple economics, folks, right? So overhead is definitely something you could be working on, definitely something you could be lowering. And one of my suggestions would be to literally take every line item on your profit and loss, your revenue statement at the end of the year or on a monthly basis, and literally assign to different team members the task, purpose them with actually lowering that expense, and literally split with them 50-50, anything that's lowered. So if you had a $10,000 a year phone bill and they could set up and get a exact same or better service for $8,000, $2,000 savings in the first year, give them half of it. Write them a check for $1,000, because you're going to save that $2,000 year after year after year. And so it gives them incentive to go, above and beyond the call of duty. Tenancy agreement or lease options. Is there an option for renewal on the lease? And if so, how long and what rate? This also fits under goodwill, as I spoke about earlier, but literally this is such an important one. We've actually seen it be an amplifier, and more people looking for increased are willing to give more money to a doc if they have better lease options, longer term lease options for renewal, particularly if they're locked in at market value or at a set rate of increase. So somebody knows they're not going to get raped down the road somewhere by a landlord increasing their rent by stupid amounts of money. So lease options, very important to amplify. Growth. Everybody loves to bet on a winner, folks, right? So the practice is in a consistent growth phase, or is it actually stalemating or declining? I contend that life is like binary code. It's about zeros and ones. It's about expansion or contraction. And if you're not expanding, by definition, you're contracting. And so again, if you've got a winning track record, which you can definitely influence if you're thinking about a timeline event history on when you're going to transition their practice, you're definitely going to be working on your growth and moving towards more growth and amplification of the great service you offer humanity. Price versus wellness care. Based on PVA, more docs are looking for wellness-based practices, and we've seen this be an amplifier of up to 25% of the goodwill coefficient. So again, depending upon obviously your philosophical persuasion, your technique, your philosophy, this may or may not be an issue for you. But if you're someone that's in your heart, is it more of a wellness care doc, but your practice is how you were trained in more of a crisis care model, then this is definitely something you can influence and would influence the value of a market value assessment. Not to mention the fact that it's going to be good service, all the way through your career, so you're going to get a chance to serve more people in a wellness-based practice. A building, a lot of docs are actually interested in buying real estate as well. So if you have the ability to own the land or the building you're in, then docs are literally escalating prices by 5 to 10% of goodwill, again, based upon the fact that you have a building and are willing to sell it, okay? And financing is one of the other issues that we want to talk about tonight relative to an amplifier. Again, it's just about widening the funnel at the top of the lead generation kind of concept here. And if the vendor's willing to finance some or all of the deal, it can and will escalate the value. And again, this can be as little as 5 or 10% in terms of financing, or can be as high. I've seen docs finance as high as 50, 60, 70% of the purchase price. And as a result of that, it opens up more ability for more docs to buy, because again, a lot of younger docs particularly don't have a lot of asset base, a lot of financing behind them. They don't have a lot of credibility with the banks. So they go to buy something that's $200,000 and they want it 100% financed. They're asking for something very different than if they're buying a $200,000 asset like a practice, and it's they only need 50% of that, or 100,000, because they've secured alternate financing, in this case with the doc or the corporation that's selling the practice. They've got that stability there. They've got that piece of the puzzle looked after. So again, financial issues can be great amplifiers for the ability to sell a practice for a good market value assessment. All right, let's talk a little bit about some of the resources and tools you're going to need to do an appraisal. But before we get there, let's just talk a little bit about maximizing the service before you sell. As I said earlier, I think it's more and more of a trend we're seeing as people are looking at being more wise, more preventive and proactive in their approach to their practice and their business, as well as to what they recommend to clients relative to their healthcare, relative to chiropractic adjusting cycles, and so on. And so again, I really want to encourage you to consider investing in your practice long before you're ready to sell it, in order to ensure that you are maximizing your service to humanity, maximizing your profit in the business from a revenue standpoint all the way through, and maximizing the selling price as a result of doing that other piece of the puzzle. All right, if you're actually someone that's in a position where you'd like to be doing a practice appraisal soon, here are some things you're going to need. You need financial statements. Get the last 3 years' financial statements, electronic versions, I might add, from your accountant, bookkeeper, whoever it is, probably your accountant. And review them with your accountant or bookkeeper to find out where the ethical deductions are in the statements that can be added back to the revenue to give an accurate depreciation of the profit being created in the practice. Most accountants that are worth their salt are trying to at least get back in tax savings for you the level of 1 year of investing with them. So if you're paying your accountant $5,000 a year, they want to definitely get at least $5,000 of tax savings in there. So as a result of that, they tend to write stuff off that is ethical, but maybe isn't a pure cost to run the business. One of the ones we see is amortization. Amortization is definitely, according to the the tax people in America and Canada, a legit reduction or deduction, but it's really not a true cost to run the business, because it's not something tangibly going out on the tangible side of a profit and loss, or a debit and a asset on a balance sheet. So again, looking at getting your financial statements together, something that's very wise and necessary. Get your asset list. Again, we have forms for this, folks, but if you'd like to just get a pencil and paper, go into each room, every space, mark everything down that's in there that's an asset. When did you buy it? What was the initial purchase price? 25% depreciating balance, except electronics, which is 30, down to market value assessment. So again, creating an asset list was really important. Getting a marketing plan, make sure your marketing plan is up to date. And this is a key feature, folks, that a lot of docs aren't still not doing well. Well, actually, a lot of docs aren't taking the time to have a structured marketing plan, so that's a whole other discussion in of itself. But if they do, they're not tracking their return on investment. We've got a free download on our site, folks, on the drtompreston.com site, on one of the best marketing plans I've ever seen in an Excel format. It's all structured. It's easy to follow. It's comprehensive. It's everything one place, one time. You can track your ROI. The formulas are all there. I mean, don't hesitate to get on our site and have a look for that. But again, in terms of our discussion tonight, make sure you got a marketing plan and make sure you're tracking the ROI. Policies and manuals, make sure that you have recent copies of all your office policies and procedure manuals, financial policies as well, and that all materials are given to clients. It's basically something that gets left on the back burner lots of times by different docs that we've worked with. All right, moving on. Office schematic, floor plan, pretty simple to access. Making sure you're getting office pictures. In the old days, people used to do site visits to an office. It's incredibly time and energy consuming. So we don't do it in our company, but we can get inside your practice if you're taking pictures in every space in the different locales in the office. Another thing that isn't so much a thing that you're going to want to collect, but something you want to think through is the concept of confidentiality, right? Think through whether you want to communicate to your team or not about your plans. My suggestion is to enroll them in the process, as there's less work for you, and they're going to find out anyways, and that is just messy. Then a doc in Ottawa region recently hired our company to appraise his practice, and he asked us to do the marketing package as well. And one of the things he neglected to do was to communicate with his longtime 25-year assistant about the fact that he was, going to be retiring and selling his practice. When she found out, and they always find out, when she found out, she was furious. She was so furious she threatened to quit. And if she threatened to quit, it was going to definitely impact his business in a negative way. So literally, he had to, not only did he ask me for advice, and I said, suck up and apologize right away. That's a huge oversight to not, it's a breach of trust on their side. That's what they feel like. You don't trust them enough to tell them what the next phase, particularly after 25 years. That just seems horrendous to me. But anyways, error in judgment is fine, not life-threatening. But in inevitability, she said, well, you know what? And I want to make sure I get all my vacation pay and I get all paid up to date in terms of severance packages. It cost the doc $16,000 to make her happy to have her stay. It's worth that to him, to honor the relationship they've had for 25 years, but also because the practice was worth more if she was staying. So again, confidentiality is an issue to think through, but it's not as big a deal, I think, as some people think, particularly with your existing team. Again, I just want to just touch base. We touched on it a couple of times, the concept of succession planning. I contend, and most business strategists will tell you this, that one of the keys to any successful business is to have an exit strategy, and make the exit strategy as you go into the business. It's like one of my mentors in the real estate market told me years ago. He says, Tom, you make money on the front side in real estate, right? Make it on the front side, knowing that you're going in and buying a devalued property or building or land or whatever, right? And same thing with the business, folks, right? If you have an exit strategy as you go into the business, even if it's 30 years from now, it gives you an example of what to do, where and when to have a successful career and to be ready to pass the baton, pass the torch on to the next doc to ensure that they do as great a job as you've done throughout time. To wait till you're 3 to 6 months away from retiring, folks, again, we're happy to help out if you'd like us to help out, but I tell you, you've really got your hands full. We've got our hands full, for heaven's sakes, in maximizing the ability to transition the practice for you, right? So again, don't be hesitant to think about succession planning. Because here's the other piece, folks, right? I contend that what you do as a chiropractor in your area, your community, your zip code, your postal code, whatever, is really important work. And if it's important work, why isn't it important enough to carry on to your community long after you're not there, long after your team's not there in that physical plane? And so if you really think about that, if you really value the service you offer, why not start thinking about a longer term, 50, 80, 100-year strategy for how to manifest the maximum level of service to your, to your community. If you're someone that was ready to do evaluation, then just go to our webpage. That's www.drtompreston.com. It's drtompreston.com. And there's literally a picture of the homepage. If you click on chiropractic practice evaluation, you'll definitely get a lot of information and data about how to go about getting a market value practice assessment with us. As I said earlier, it's one of the biggest issues with docs is they just don't know what to do and they don't know who to turn to. So we would love to be that voice of reason for you. As I said, I've been in this profession, coming up on 30 years. I've been a professional coach consultant in the profession for 18. Certainly been doing this work, market value practice assessments for closer to 10 years. So if you're someone that would just like to brainstorm and think about what your options are and things to consider and think through, just, I'd love to chat with you. You're a colleague. I'd love to take the time to chat with you. Totally on my dime, if you will. It's just a chance to help another colleague move forward with their life. What you're going to do is go to my website at drtompreston.com and then put in /call, and you'll be put through to the team members who will get in contact with you. Would definitely book you some time to do one of those complimentary 20-minute authenticity calls to give you some direction and feedback. And here's why we're doing it, folks, right? Put simply, I believe that life is binary code. It's about zeros and ones. You're either contracting or you're expanding, and we're definitely in an expansion mode here at Full Circle. We also know the old cliche that a rising tide raises all ships is true. And to the degree we can help you expand and grow energetically, we're going to expand and grow as well. And that's something we're here to do, is to serve humanity at the highest level we're all capable of doing as a team. A couple of other things. If you're someone that realizes that systems is definitely one of your weaknesses in your practice, and you'd like to learn and or practice, is the keyword here, practice, role play, work with other docs, hear how other docs do reports of findings and progress reports and table talk, how I did it in my very large volume practice years ago. I mean, again, I'm not saying it's the only way to do it, but it's a good way to do it. We're going to share lots of different ways to do it. You're going to come out of that weekend with a lot more confidence and certainty about your systems. You'll practice it and practice it and practice it until you're probably hoarse. And you'll come out of it on Monday will be different because of the work that you're going to do there. Again, it's 2 days. It's literally 26th, 27th of September at my good friend Dr. Peter Amlinger's office in Mississauga. We'd love to have you. It's a relatively very, very low-cost program, even though it's very time-consuming on our part. It's $377 plus tax. Associate docs are $277 in the same office. At this point, we're not opening up to staff unless you have an office manager that's very, very integral to your systems. Because we're going to be in a lot of role playing. We're going to be in a lot like roll up the sleeves and let's get to work here, folks. This isn't just a talking head. This is an active accelerated learning model of a seminar, and we want to make sure that you get maximum value out of it. So $377 plus your taxes, associate docs $277 at this point. However, because you've sat in this webinar and you have a greater appreciation for who we are and what we do here at Full Circle, and you've been kind enough to spare some of your hard-earned time to get here, we'd love to offer you a discount on that. Literally, just as you check out on our shopping cart at drpreston.com, you enter the coupon code webinar, and you'll basically receive all the best of an $80 discount, whether you're an associate doc or a doc that's you're the primary doc in your particular office. So there we have it, folks. There is our run through of our how to retire rich from your chiropractic practice. Lots and lots of meat and potatoes in there. There is a recording of this. If you'd like to get the recording, we'd be happy to send it to you. In terms of giving you access, I should say, is probably a better way to say that. We'll really send it to you. You can access it on our website once it's put up, probably tomorrow afternoon. If you'd like to get it, because there's lots and lots of content, lots of data in here, lots of things you can do to help yourself well before you are ready to do a practice evaluation. But if you are, in fact, ready to do a practice evaluation, let me just share that slide with you again. It's on our homepage, chiropractic practice evaluation, circled in red there. Click on that, and it'll walk you through all of the details of how to do that. So that's really what I wanted to share tonight, folks. We're about 14 minutes past the hour by my clock, by my watch. I'd be more than happy to open the conversation up to some questions. If that's something that somebody has, you can either type it out in the chat bar on the webinar platform, or in fact you can we'll open the line up to live here, assuming I can hit all the right buttons and get things on track from that standpoint. So let's just see here if I can get this thing to click the right buttons here. That is not the right button to push. I apologize, folks, right? Sometimes I change the platforms here and it gets awkward. So let's just see if there's anybody here that would like to ask a question about the content that we have gone over tonight. And again, one of the key things here is going to be to get to access that particular piece of the puzzle, which is not intuitive right now. It's not jumping out at me, so I apologize, folks, right? Wow, frustrating. Let's just see if we can...
All attendees are muted and may unmute themselves by pressing *6.
So if you're on your phone or you're on a landline, you can push *6 and you'll become live. And I would love to take any questions that you may have about your particular situation or any of the content that we covered tonight in our webinar. So anybody have any questions for us? There's that awkward silence as a presenter is to know when somebody has. Well, if you have a question and you just can't seem to hit *6 or you don't want to share it publicly, just email me, folks, at drtom, that's drtom at drtompreston.com. Happy to take your question, and if I can't answer by email, we'll book a time where I can go over it with you on the phone somewhere by doing an authenticity call. It's my gift to this profession. It's my gift to humanity to do more of those. So if that's where we're at tonight, folks, I'm going to leave it there. Thank you so much again for joining us. And remember that what you're doing every day is making a difference. Enjoy the rest of your evening, folks, or wherever you are in the world, whatever part of the time you look at this, if you're watching the recordings. And God bless.